All right, so here we are. We're looking at Bitcoin. We're looking at the 1 hour chart here on CoinGlass, and we're looking at the specifically the liquidation levels here for Bitcoin. So you can see we've had a pretty sizable move to the downside as of late. And in today's video, we're really going to cover some critical pieces of information that I'm watching for Bitcoin, and why I think it's important to start thinking about taking some profits off the table. Um, you don't want to sell into weakness, but it's difficult to sell when Bitcoin's pumping, right? It's really tough to sell in these high euphoria moments, and ultimately the majority of traders, especially retail traders, will end up selling into the panic, and they will start selling when it's too late. So I think the purpose of this video is really just to show you what I'm looking at as a long-term holder, and why I think it's wise to start reallocating your portfolio, increasing the size of the, whether you're in stable coins or in fiat currency, whatever you're trading with. But let me jump into a few things that I'm looking at for Bitcoin. We're going to look at long-term charts as well as some short-term charts. But first things first is I always like to come over here and look at the liquidations. You can see that this is the liquidation heat map. So where it's really bright white is where there's a lot of leverage stop losses essentially. So if it's to the upside, these are short stop losses, and to the downside, these are long stop losses. So you can see that this is where I think it really started to break down here, is when Bitcoin made this push and liquidated all of these shorts right here, and then kind of came down into support, and then one last push into this very high liquidation area. And then since then we came down, and look what happened. We liquidated these longs right here. This is a massive long liquidation. And remember, the exchanges know where the positions and the orders are being placed on their exchanges, and they really only make money when they liquidate their traders. So that's why looking at these charts is very important. And I think now that we came down into these liquidations here, and then we kind of popped up down into these liquidations right here. Look at this massive liquidation event here that took place once we broke through this level. And I think there's really only one more stop here for these liquidations. As you can see, we're kind of breaking into this level today, which is this high liquidation area around 112,000. So I do think that potentially once we get down into here, we could pop up, back up into maybe 116 into this, into these volume areas. You can see the next level of, liquidations for the short sellers is right around here, around 120K. So that's quite a ways away from the current prices. But these markets do move up and down, and I think that we've had sufficient bull liquidation on these shorter time frames. And I think once we get this last little push down into 112K, I think that should represent a little bit of an oversold level for Bitcoin on the 1 hour. Also, there's definitely a trend line forming here. I'm going to show you some of the charts and some of the different perspectives that I'm looking at. So let's jump over to TradingView. First things first, we're looking at Bitcoin here on the weekly. So what I'm seeing here, especially on the log scale, guys, is this sort of ascending wedge pattern where we got, top, bottom, top, bottom. And so what's going to happen is if this trend line breaks to the downside, I really think the bull market is going to be over for Bitcoin. Everyone is sort of anticipating a Q4 push, including myself. But you know what I'm saying? The data doesn't lie. And there's a few very cautionary signals that I'm seeing here for Bitcoin on the weekly. First is, even if we do hold onto this level and we push towards December higher, I think the top of this channel around 160K is going to be very hard to break for a number of reasons. Just looking at purely structure, I think if we do come down and we get support and we push up higher, highest we're going to go in this bull market push is probably around 175K. Everyone wants 200, and what everyone wants usually doesn't happen. So that's kind of how I'm thinking about this. And since we already hit 125K, realistically, what is that? Another 30% upside? It's really not that much. So you got to start thinking about, okay, what's the trade-off? 30% upside, potentially 70% downside. So the risk reward is starting to fade a little bit from a long perspective, right? Also, you can look at this and you can say, well, from the bottom, we're already up 500 or 600% to where we are today. there is going to be some profit taking. So that's kind of how I'm looking at the structure. Clearly, we have this 100K level as well, which I do think we're going to be battling similar to the 10K level. Um, if any of you guys were around back then, I was definitely calling out that, once we pushed through 10K and we pumped to 20K, there was probably going to be a massive retest into 100K because it's such a massive psych level. We're going to have to go above it, below it, above it, below it, and really battle out that psychology level. So I think that's what 100K is right now. We haven't really came below it since May of 2025. We pushed above it. We kind of retested and popped higher. But in the long run, I think we're going to have to come way below 100K, back to it, get above it, back down to it. And that's a pretty big downside from here, right? Dropping from 125,000 to 100,000, and that could be enough to kick off the bull market. I know if we get more than a 30 or 40% correction, that usually means we're going to be headed lower. The other thing is, guys, just based off of the structure here, I want to point out that what happens with Bitcoin when, let's hide these indicators, when we start to get some toppy candlesticks, you know what I mean, with some wicks. So you look at previous bear market cycles and previous market cycle tops, these candles where you see extreme wicks and no closes above a very, very solid horizontal line has indicated the top in the past. You saw it over here as well. Wick, wick, and then down. You see it over here as well. Just some wicks, down. Here you see some top wicks, down. Right? So these two wicks right here, guys, around 125K are very, very bearish, right? These two wicks, see how we had 1, 2, 3, 4, 5, 6 weeks couldn't close above 120K, and every time we got above it, it lasted less than a week, and now here we are getting a very bearish candle. So if this candle cannot pop back up and close above like 115, next week it could be very, very bearish. The other thing is just some trend lines here, guys, that are really breaking. Just if you wanted to take a weekly trend line just like this, we can see that broke, right? And if we zoom in here on the daily, let's get a better picture of what that trend line looks like over here. You can see that this has really kind of been the catalyst for the breakdown. You can take a trend line starting like down here, right? Touching this point here, got a little bit of support here, pushed up. But once we broke below it, you can see this really started to sell off. And zooming in even further, right, into the 4-hour, you can really get a sense. Let me just zoom out here. Actually, you know what? Let's go ahead and trash all of these drawings. And let me show you what I mean by this. So on the 4-hour, right, now we can take a trend line like this. So from these bottoms here around 75K, right, we're going to obviously touch this point here because this was a huge point of support. And you can send this out, right, and you'll see that we touched this point and we came down into this trend line, try to push higher. Once we broke below this trend line, it was really game on for the bears. Okay, so see this trend line break, kind of a retest, and then down, and this has been holding us down ever since. So just some structural things that I'm looking at. Very, very, deep sort of bull fake out here. These are kind of giving me the same sort of emotions, the same sort of thoughts that occurred in 2021 when we started to see the top of that bull market. Let me jump over to some other charts that I'm looking at. Let me open up. I really want to get a good look at the RSI as well, because there's some pretty heavy divergence, guys, on the RSI. Let's open up the RSI channel here. All right. So here's a very simple chart for Bitcoin, but a very powerful one as well. Here we are on the weekly. You can see the 50-period moving average touched here, and we're very, very far away from the 50-period moving average right now, coming around at 92,000. So that's just acting like a magnet that really wants to drag down. You can see that we did get a blue sort of sell indicator as well. This is when the RSI crosses below the parabolic SRI. So we're using the RSI with parabolic stop and reverse, so that whenever the RSI actually crosses below the parabolic, it gives us this signal. So this was you can look at it in the past, right? It's been pretty accurate buy and sell signals in the past. It was accurate here, buy, an accurate buy signal here, an accurate sell signal here, buy here. And we did get one of these 2 weeks ago for the sell signal. So I'm watching that. It looks like it just really wants to get pulled back down into this 50 period moving average. And this is what I'm talking about, guys, with the RSI. We can see clear divergence, right? You can see RSI got up to 85 here, right? Then it only, okay, so my TA is already on there. So I'll just go ahead and explain it. RSI gets to 85, then it only gets to 79. And here we are hitting this trend line resistance on the RSI at around 70. However, the price has been moving up. So up, up, up. We call that divergence. So there's actually less buyers coming in the market, meaning more sellings coming in the market, but the price is still moving higher. And that's one of the key indicators that I watch for in the RSI. And you can see I'm looking for a bit of a descending channel here on the RSI weekly. And if we cross below this 60 level, which we are kind of doing today, it's going to want to come back down to the 50. And you can see we've already held on to the 50 how many times? So I'm going to get rid of this right here. I'm going to get rid of this little channel. But you can see once, twice, three times we held on to the 50. We haven't really been oversold for a very long time. And you can see that this red line here is actually the 300 period moving average. It's a volume weighted moving average. You can see the bear market bottomed right there last time, and look at it, it's coming in around 40K right now. And you can see actually this is my publication on TradingView that I posted just for reference here. Let me open this up, because you'll see that I was calling for some big returns. I was actually, market was panicking. It was the very bottom of the bear market. I guess it's not going to let me post that, but basically I was calling for a 10x return in 1,000 days from here, and that's exactly what we saw. Not quite 10x, but we're around 6 or 7x. And you know what I'm saying? It is feeling like a little bit of fear is coming into the market now. So we can also take a fib here like this, down from that top into that bottom there like that, and we can see the 161 hanging out there. See the 261. So let's go ahead and put on the 2 fib as well. I want to just see if we're coming into that 2 on the Fibonacci, so we can see the 272. Let's go ahead and throw those on. And you can see, look at that. If we zoom in, we're actually, we did trigger the 2, right? So look at this. So big selling happened right there at that 2 Fibonacci, right around 120K. So you can see that 2 right there, and you can see we never closed above that 2, and we're pushing back down, which tells me it probably does want to come back down into the 161, right around 100K. So I'm looking at Fibonacci extensions for sure. I want to see that these levels have been respected, and you can clearly also, to further sort of bolster your confidence, you can pull in a Fibonacci, or sorry, a volume profile right here like this, and we can see, okay, so where is most of this volume trading? It's trading right underneath that 2 Fibonacci, and you can see that we've been pulling back ever since we kind of hit that point of control. So that's kind of what I'm looking at, guys. Clearly, this RSI, right, is very, very downward sloping. You know what I mean? It's showing a lot of telltale signs of a top, because to really break out above into new all-time highs, right? Let's say we want to push higher into like 150K. This RSI is all of a sudden going to have to break out of this and push higher into like the 80% level, which doesn't seem probable. This RSI looks like it wants to roll over, and it does look like we want to come into some oversold levels like we've seen in the past, and that could represent another 60% downside. All right, so I'm watching this RSI very, very carefully. The moving averages as well. We can see that they're coming in pretty far away from the price. You can see 36K, 44K. So, and we're also running out of time horizontally, right? Because we know that we need to get out of this market by end of Q3 and Q4 at the very latest. But it might be a little crowded at that time. Everyone wants to hold on to the very end when the returns are the juiciest and the most euphoric, right? And everyone wants to get out at the very top, right? No one wants to watch their position decrease and say, I should have sold back here, right? So everyone wants to get out. It seems a little crowded. This RSI is just begging to come down into some oversold territories. All right. And then let me zoom in now. We can go into some lower time frames here. Let's see what the daily is looking like. So the daily is trying to hold on to this 40% level. See this? So here's the daily hitting off that 40, back up to oversold, or sorry, overbought. back down into the 40, back up to overbought, back down into the 40. So I think it's going to want to come down into the 30% level. And the RSI bands for the 30% level, guess where it comes in? Under 100K, around 96K. So there's just so many reasons why this is starting to look very bearish. We're trying to hold on, guys, to um, this little level right here, this little previous structure support, which popped us up. If we break this, it's really going to just be a pretty fast slide down into this next level of point of control, to 107. But once that happens, it's going to be very hard to recover from, because we're going to be now seeing moving average crosses over, right? We're going to start to see some very bearish indicators, and we could see the short sellers really start to take over this market. So that's the daily. We're going to try to hold on to this 100-period moving average right here. You can see I'm kind of looking at a descending wedge, but this is another very, very clear, just structural reason why to sell when you get a bearish engulfing candle like this, meaning it opened here, closed below the open of this sort of bullish candle, right? So that was in my opinion what sort of triggered this recent 7 to 8 day downward move. And you know what I mean, as we get down to the lower time frames, let's see the 4 hour is probably getting a little bit oversold at the moment. Yeah, so the 4 hour kind of came down into this 30% level, kind of pushed up, hit the 40% resistance, back down. So we are seeing a little bit of bullish divergence on these lower time frames. However, you can see, look, we've crossed below all the moving averages, right? Let me go ahead and hide these drawings. And you can see the moving averages, how we kind of came back down on the average, right? You had some time to get out at the average. Now we came below it. So when we get back up into these averages around 116, 117, all sort of crowded around there, it's going to be big resistance. It's going to be tough to get out of there. I think perhaps we could get a move back up as long as we can sort of break a trend line. Let me go into the 1 hour and see what we're looking at there. So see, now we can see when we get into the 1 hour, you can see exactly what I'm talking about with this moving average resistance, right? We dropped below the moving averages, came back, hit it, down, back to the moving average, down, back to the moving average, down. So the averages are really downward sloping, and there isn't a lot to hold on to in terms of support, other than, like I mentioned, that previous structure support. If you zoom out a little further, you can see that's kind of what we're holding on to, is this old structure down here. See these old lows right here? So you can send a horizontal line across there, and it could be kind of a low risk entry point for going long. However, it's going to be very difficult to break above these averages. If I zoom even further, you'll see what I'm talking about. So look at the 15-minute, guys. You look on the 15-minute and you can see massive resistance on these moving averages. We try to rally back up, hit the 300, down, hit the 300, down, hit all these averages, down. So everyone's really looking to get out at their average cost. And for the first time ever, I think there's a lot of traders that are actually selling Bitcoin at a loss. There's long traders that are locking in losses right now because the fear of the bear market is coming back. As we approach the end of this market cycle, we know we only have a couple months, so perhaps this is the smart money starting to front run the retail investors. But for me, guys, I really think it's going to be difficult for Bitcoin to get back above 120K, considering we've never closed a weekly candle above it. And now these lower time frames are really starting to get taken over by the bears. You can see jumping back over to the 4 hour. We came below, right? We came below this 300 period moving average on the 4 hour. You can see this is kind of the big support that held us up last time. I'm referring to this red line here. So that red line really held on and pushed us up last time, and now we're below it. So if we get back, we're seeing some moving averages crossing as well. If we get back up there, it's going to be very, very difficult to break above it. So not necessarily super urgent to sell right now at an oversold 4 hour. Potentially this 4 hour could start to round out a bottom and then push higher and make another push to overbought levels, but it's going to be very crowded to try to get out of here. So I think starting to allocate, maybe taking off 5% of your position, 10%, whatever you have to do, you're going to want to avoid this massive bear market. I think by the end of 2026, it's going to be very red. I think the summer of 2026 could present a very good buying opportunity. I know everyone wanted to see 200K, but you know what I mean? The law of diminishing returns is in the back of my mind as well, because the last market cycle took us up from 20 to 60. It's 150% return. This one's taking us up from 60 to 120, 100% return. I think that makes sense, right? Everyone wants that extra 50%, but smart money who's already up like 3, 4x, I don't think they're that concerned about another 30% move. So this is kind of how I'm thinking about this market psychologically. Um, it hits very quickly, guys. The bear market flips very, very quickly, and you won't actually have time to get out of it like you think you will. So I'm watching this very closely. I'm definitely hoping for some sort of relief rally here. You can see I've got this descending wedge, but it's not that. It's really not a whole lot to hang on to here in terms of a descending wedge. But you can see that the trend line 1, 2, 3 resistance. So we're gonna have to hold on to this level. If we can't hold on to 112, like I said, going back to this coin glass chart, I really want to look for today. What I really want to know is I want to see this last liquidation leg right here get liquidated right around 112K. And then I want to see some recovery start to happen, because this 118K level, I got to say, these bears must be sitting sitting pretty right now, thinking we're never going to get back up to this 118 level. So my liquidations should be pretty safe. Um, You know what I mean? So I'm going to be watching this closely, but I think it's wise to start thinking long term, knowing that the higher time frames, especially the monthly and the weekly, the RSI, some of these, the MACDs crossing over, some of these common indicators that I've seen in past bull market tops, bear market cycles are triggering. So that is going to do it for today's video. I want to thank you for watching, and I'll see you on the next one.